Thank you so much for coming to the
Thanks
studio.
very much, Mel. I
I know
appreciate
you're
this.
very busy. You're the wanted man.
I don't know if I would say that, but sure.
You're in the US TV all the time. I see you and you're giving your reports and we love it. We love and we watch it in Turkey too.
Thank
Now
you.
you're our guest, our
Thank
special
you.
guest
Thank
today.
you for having me.
We'll talk about the outlook in 2012, but
Sure.
before that, it looks like our economy in the US is doing pretty good in spite of the challenges that's coming from Europe. Is this going to continue? Are we going to see some good news in the short and in the long run going into 2012?
Well, that's the important part here because so many economists and strategists have been talking about this idea that the United States could be decoupling from the rest of the world. That is to say, moving independently from everything else that's happening, say, in Europe or in China or other places. If you look at the economic data in the U.S., there are signs that things are getting better. Manufacturing indicators are starting to turn up. Jobless claims, the weekly jobless claims, unemployment claims are at a 3-year low. You're also looking at an environment where people are starting to spend a little bit more money, especially now during the holiday season. So if you put all of that together, the outlook does in many ways look bright. That's according to many economists. So it could carry forward into 2012. The question is going to be whether or not the retail spending, all of that shopping continues. Remember, retail spending makes up more than 2/3 of the U.S. economy. That's going to be important if the holiday spending continues even past the holidays.
Are we going to see these positive factors priced into the stock markets? This equity market, has been so volatile. Are we going to see, because we're at the last weeks of December, are we going to see a Santa rally maybe?
We could see a Santa Claus rally. Now, people refer to this Santa Claus rally. What they say is that stocks typically, on average, go up between December 23rd through about the first or second day after the new year in January. Now, there are a number of traders who think that this could happen, but right now, you have to remember that there aren't that many people playing in the market. When it's the holiday season, a lot of people are on vacation. There's not a lot of people in the marketplace, and you're seeing trading volumes. People are not trading as much stock. So if you see these volatile swings, it's because it doesn't take a lot of stock to move the market up or down. And that's the reason why you could see this volatility continue. But it could be a positive sign if that momentum to the upside can continue into 2012.
On a day-to-day basis, Dom, you talk to the traders, portfolio managers,
Sure.
investors, strategists too. What do they say about 2012 outlook? The fortune teller comes into the picture right now.
Right,
Let's
now,
talk about future.
Nobody has a crystal ball, obviously,
Yes.
but what we do have are very smart people whose job it is to forecast where the markets will be. If you look at the S&P 500, the average estimate, the median estimate for where the S&P 500 will end 2012 is right around this 1345 level, 1345. Now, if it was to go there, that would be about an 8 or 9% gain from the current levels that we're seeing right now. Here's the interesting part, though. That's the average. The high estimate is 1,500. That's a huge move for the markets from here. But there's also low estimates as well. 1190 is the lowest estimate that we at Bloomberg poll in terms of strategists. But the interesting part about this is there aren't that many strategists who believe that it's going to be a straight line up or that's going to be a gradual increase up. We could continue to see ups and downs, which is why some strategists say that they like the levels that we're heading into 2012, but that we might see a big downturn even before that. So there might be better chances to buy down the line. Even if you do believe the S&P will be up 9% from here, there might be a better chance to buy it even lower than it is right now.
But I hear from the economy you're on the bullish, and then in the long run in the stocks and the equity markets, you're in the long run with the,
Sure.
of course, potential to buy. Let's talk about the dollar. It's been on a rally. It's been on fewer, let's say.
Yes.
Do you expect to see, and this is my last question.
Well, no, that's fine. No, because the
Continue.
the dollar's been very important because so many traders basically have been citing the relationship between the currency markets and how stock markets perform. People have been looking at the euro as a perhaps leading indicator for how stocks in the U.S. are going to trade. If you look at the dollar index, if you do see a continued flight to safety type trade, that is to say people wanting to get away from the European mess, wanting to get away from a possible hard landing or a possible slowdown in places like China, other emerging markets, you could see a continued bid, prices going up for the US dollar. Now, the flip side to that, when dollar prices go higher, when the value of the dollar increases, typically that has a negative effect on commodities because oil, gold, silver, all of these are priced in dollars. So as dollars become more expensive, it becomes more expensive to buy oil, gold, silver. So if you do continue to see this U.S. phenomenon happen, that people want to be in the U.S. Remember, our Bloomberg Global poll said that global investors think the U.S. will be the best place to invest over the next 2 years. If that does happen, we may see some more volatility in commodity prices. That's going to be something to watch out for. Obviously, right now with crude oil, at least for U.S.-based crude, West Texas Intermediate crude, at about $100 a barrel, we could see that become more of a factor in 2012 as well.
And that's going to be reflected in the U.S. dollar too.
It could be. It could be. They're all very much interconnected these days.
Thank you so much for your valuable insight and the 2012 outlook.
Thank you. Thank you very much for having me.